All right, guys, welcome back to Oropack Trading. My name is Joshua, and we'll get straight into this video. So for today, we're going to be going over support and resistance, and also talking about psychological levels. So first things first, we're going to talk about support and resistance. So when it comes to technical analysis inside the market, our goal is to be able to have entry points or certain price points that we use to get into the market. So what we do is that we look for areas where we call support and resistance to be our entry points to either going for a buy or going for a sell. So when it comes to, let's say, support is the floor. So when you're sitting on a chair, that chair is supporting your weight, right? It keeps you, it underpins you, right? So I'm going to put a line over here, and we're going to call that support. All right, so let's just say right over here is support, or we can put it even down here. And we can say that this price right over here is or this line over here is underpinning price. So we call that support. Now, when it comes to resistance, we're going to put it up here. Resistance is the ceiling. And what that is that it's like when you jump up, right? You jump up and then you get your head on the ceiling. What it does is that it keeps you grounded, right? So the ceiling is always to keep you grounded. So when price comes up to the resistance area, it's supposed to, for the most part, reject off of it and come back down to support. Now, of course, as you do technical analysis, you will see that price can end up breaking through resistance or also breaking below support. But for the most part, that's what we look at. When we look at support and resistance, those are key areas that we're focusing on to see if we're going to go in for a buy or if we're going to go in for a sell, right? So how do you find proper support and resistance? So one of the things I like to do is to focus on support first, because when you support can become resistance and resistance can become support. And I'll show you guys what I mean. All right, so let's look over here. I'm going to use my trend line tool and just focus on this dip right over here. So we can see price coming down, right, to this area and then bouncing up from this area, right? So what I'm going to do is that I'm going to say this is support, okay? Right, so this is what we call support. And I'm on a higher time frame. It's easier to find support and resistance on a higher time frame. So when you do your support and resistance, make sure you do it on like a 1 hour chart, 2 hour chart, 4 hour chart. You don't want to do it on a smaller time frame just because it can be invalidated. You will always see little support and resistance zones on a smaller time frame. But if you want a zone that's a proper marker of support and resistance, always go to a higher time frame. But yeah, so over here we've seen that price went down here. Okay, it went all the way down here, and we see that rejected off of this point. So once it came down, it hit support and it came right back up. Okay, so I'm going to put this line over here and say this is a good area of support. But what I also do is just to make sure that that is a proper area of support, it's always good to go back into the past and to see if price hit that same spot at some point in the past. All right, so I'm going to go back. So the first thing I'm going to do is I'm going to put my circle right over here just to map out, okay, that price did hit this area. Okay, now I'm going to go back in the past and I'm going to see if price hit that point at some point, well, in the past. So let's see. Okay, right over here we have another point. So we can see that price has a history of hitting this specific area. So what that does is that it tells you that this is a proper area of support, because price came down here and then bounced up from this area. So that is support. And I'm sure if you go back, you can see more areas where price bounced off of this area to create support. I mean, you can see it over here again, right? A proper area of support. You can see it multiple times. We have multiple areas where price bounced off this support line and came back up. Now, I was saying before that support can become resistance and that resistance can become support. So what do I mean by that? Let's look over here. So we have to understand that when price is above the line or above a zone, this becomes support. But when price is beneath that zone, it becomes resistance. So again, when price is above this line, it becomes support. All right? When price is beneath this line, it becomes resistance. All right? So again, if price is above this line, it becomes support. If price is beneath this line, it becomes resistance. So that's why I like to find my support zones first, because just because you will always see more support zones than resistance, just because of price retracing to a certain level at one point in time. Because resistance, price is always going to make new highs in the future, right? That's the whole point of the market, is going to make new highs. But when it comes to support, you will have plenty of support zones because price is always going to retrace back to where it came from, right? So price always knows where it came from. So again, we can see over here how price hit against this area. And again, it's not going to hit it perfectly and then come back down. It may hover around the line, hover around the zone at some point, but then it will come back down or will break above it. So we can see when price came back up over here, we can see that price came up, hovered around here, and then came back down and so forth until it broke above it. And now this resistance right over here became support. Okay? Right? So that is how you find your support, and that is how you find your resistance. Okay? Now, this is all great, right? And I really like finding support and resistance this way, which is nothing wrong with that. But there's also another way that I prefer myself, and it's called psychological levels. So psychological levels are price points, right? Where, excuse me, psychological levels are price points where traders are pretty much, how would I say it? I would say that traders are, it's like a self-fulfilling prophecy, right? There are certain markers that end up, or certain price points that end up in a half point or a whole level that becomes a self-fulfilling prophecy that traders are pushing the market to. So let's say, for instance, right, we're looking at the US dollar Japanese yen. Okay, let's look at where price is currently. So price is currently at 157.79. Now, when you think of a whole number doesn't have decimals, right? So that basically means if we're looking to make this price a whole number, that would be 157. All right. So 157 will be a whole number, right? So in this case, since price is already at 157.78, right, then 157 will be support. Now, if you're looking for the next resistance or the next resistance point, that'll be a whole level above, which will be 158. All right, there we go. And you can see, just by understanding the whole numbers and the half numbers, you can see how price honors these points. Right, look at it. You can see how price was balancing around 157 and now currently is moving to 158. And you could even go below 157 and go to 156, and you can see how price rejected off 156 beautifully, right? So these are even numbers, right? And a lot of these financial institutions they like psychological levels. These are where they push price to. So if the big guys are pushing price to these areas or they're honoring these levels, then us retail traders should also be following suit, right? Because we know that once price gets to these psychological points, that price is going to react in a certain way, whether it's going to go up from there or whether it's going to go below that psychological level. Now, I was saying that psych levels are in whole numbers and half numbers. So what do I mean? Let's look at, we see that all these levels over here are whole numbers, 156, 157, and 158. Now, let's say we want half levels. What is the half level between 157 and 158? Okay, that'll be 157.5 or 0.50, however you want to say it. Okay, and we'll just make that one gold right over here. So we can see that this is that mid-level. So we have 157, 157.5, and then 158. So 157 to 158 is a whole level. That's 100 pips. And 157 to 157.5 is 50 pips, right? And also, I think I'm going to do a video just to explain pips if you guys don't know, right? So pips are pretty much the price range or the unit of measurement when it comes to trading Forex. So instead of you saying, in this case, oh, price went up by a cent or 1 cent, we say price went up by 1 pip. So 157 to 155 will be 50 pips, right? And 157.50 to 158 would also be 50 pips. But 157 to 158 will be 100 pips, right? So just pips are just the unit of measurement that we use when we're trading Forex. But yeah, let's look at 156 to 157. If we're looking for the mid-level between 156 and 157, that will be 156.5. So again, these are just mid levels and whole levels. Now also, if you look at, let's say you're trying to get in at 156.5 and then move all the way up, 156.5 to 157.5 is also 100 pips, right? So it doesn't mean you have to necessarily get in exactly on the whole number. You can also get in on a half number and go to the next half number if price allows, right? So 156 to 157, 100 pips. 156 to 156.5 is 50 pips. 156.5 to 157 is 50 pips again. All right. Now 157 to 158 is 100 pips. 157 to 157.5 is 50 pips. And 157.5 to 158 is another 50 pips. So you could think about it as 100 pips apart from the whole levels and 100 pips apart from the half levels, right? If you're going from half level to half level, or you can just break it up into 50s, where 156, 156.5 is 50 points, and then so forth. So you can break it up into whole levels, break it up into 50, into half levels at 0.50, and so forth. So it really depends on what your strategy is and what you're looking at and how price is arranging itself. But yeah, this is how psychological levels work, and this is what I usually prefer when I'm trying to get into a trade. I focus on my psych levels, whether I want to get in on a half level or whether I want to get in on a whole level. So that all depends on where price is. All right. Now, what I also want to do, I do want to be able to show you guys how whole levels and half levels work when it comes to other currency pairs. Now, pairs that have the Japanese yen attached to it is very unique. So you can see that any pair that has the Japanese yen attached to it has two decimal places. So we can see right over here. But most currency pairs actually have four decimal places, right? Has four decimal places. So we can see right over here, 1, 2, 3, 4. And these are just nano measurements, so we don't have to worry about those. So those are nano pips. But we have 1, 2, 3, 4. So we have four decimal places in every other currency pair. So again, any pair that has a Japanese yen has two decimal places, and every other pair has four decimal places. So I showed you guys how to find your whole numbers or your whole levels and half levels when it comes to pairs that have the Japanese yen attached to it. But let's say you're trading the Euro USD or the British Pound USD or whatever other or any other pair that has four decimal places. How would you go about finding support and resistance? Okay. So this is how it works. And I know I said before that whole numbers when it came to the US dollar Japanese yen is like 157, 158, and 159 and so forth. But when it comes to pairs like the Euro USD, a whole number technically, I mean, the whole number would be the one in the front. So anything behind the decimal normally would be a half number. But in this case, just because of how currencies work, a whole number in this case will be 1.17, 1.18, 1.19, 1.18, 1.19, 1.20. All right. So what I'm going to do over here is that price is currently at 1.16988. So I'm going to put our whole number, let's say at 1.17. Okay. So currently price is beneath 1.17. Okay. But it looks like it's kind of hesitating around that point. So it looks like price is going to break above 1.17. So let's just say we're going to, right now, 1.17 is the resistance, but I'm pretty sure it's going to be support very soon. But regardless, let's go a whole level above that, and that'll be 1.18. All right. So you can see how that is a sizable distance when it comes to just when it comes to, let's say, 1.17 to 1.18. That's a sizable difference. So that'll be a whole number, because let's say if we thought that, okay, the next whole number would be 2. So instead of 1.16, the next whole number will be 2.16. Mind you, any little move. So when it comes to currencies, is that we trade in lot sizes. So we have lot sizes, we have micro lot sizes, we have mini, and we have a standard lot size. So pretty much every little movement based off the lot size can be a sizable amount or sizable move in the forex market, right? So because these are currencies, if price just started being appreciated to, like, if let's say price appreciated all the way to like $2, that'll be a significant jump, and then we will know something is wrong in the economy, right? So if we look at, let's say if price went to $2, you see how far that would be. So that's the reason why that's not how that works when it comes to trading Forex. So when it comes to the whole numbers, pertaining to currencies that have four decimal places, we look at the numbers in behind, the first two numbers behind the decimal, right? And in this case, that'll be 1.17, 1.18, 1.19, and so forth. So I'm going to put even 1.16 beneath the 1.17, and all of those will be 100 pips apart. So 1.16 to 1.17 is 100 pips, and 1.17 to 1.18 is also 100 pips. Now, if we're looking for our mid levels, that will be, let's start over here. That'll be 1.165. All right, so that will be our mid level between 1.16 and 1.17. And then our mid level between 1.17 and 1.18 would be 1.175. All right. And you can see, look how even the spaces are. Look how price moves between these levels. We can see price coming close to 1.165, bouncing from there, breaking above, hesitated around 1.17, broke above that, came to 1.175, then it came close to 1.18, and so forth. So you can see how price maneuvers around, or how price hits and respects these psychological levels. And that's why I personally use them when it comes to my trades. I like psychological levels. Now I also do the regular support and resistance, based off of if I see a price go down and bounce up from a certain point, I still map out my support levels that way too. But I really do like psychological levels just because it makes, let's say if you're explaining this to somebody and they were saying, how do you find your proper area of support or resistance? Somebody can say, oh, your support is right here, and you're looking at the number levels and they all look different, right? So it can be a little bit confusing. But when you look at psychological levels, everything is mathematically positioned. So if you are explaining to somebody, you can say, okay, based off of the whole numbers and half numbers, your psychological levels will be in this place. So it really eliminates a lot of guesswork when you use psychological levels. But yeah, guys, I hope that was helpful. I hope you understand how psychological levels work when it comes to currency pairs that have two decimal places and currency pairs that have four decimal places, and just how support and resistance works in general. So yeah, guys, thank you for joining me today. And yeah, let's create generational wealth together. See you in the next video.